Most traders don't fail because they lack information. They fail because they can't handle the truth. The truth is silent. It's brutal, and it doesn't care what you think you know. It doesn't matter how many books you've read, what strategy you copied, or which indicator you're using. When the market tests you, if you can't control yourself, you'll be erased like the rest. No warning, no mercy, no second chances. The market doesn't care who you are. It doesn't care about your experience, your emotions, or your goals. It only listens to one thing: price and action. And the overwhelming majority of traders fail for one reason. They break the basic principles of discipline and risk. Not once, not twice, but over and over again. When the final trade goes against them, they look shocked. But the ending was never uncertain. It was only a matter of time. I've seen it all. Fortunes made and destroyed, sometimes in a single day. I've lived both sides of that coin. And yet, the reasons never change. The patterns never stop repeating. People enter the market with emotion and leave it with regret. They chase noise, ignore logic, follow others blindly, and refuse to accept what's right in front of them. The tape, the raw movement of price, tells them exactly what's happening. But they don't listen. They do the opposite. This isn't a game of prediction. It's a business of execution. What you think doesn't matter. What you do does. And if you don't understand that now, the market will teach you the hard way. Every trader begins the same way, with excitement. They open their first position, take a small win, and feel invincible. It seems easy. Too easy. That first profit, it's not a lesson. It's a trap. It rewards randomness and disguises it as skill. Early luck is the most dangerous teacher in trading. It creates overconfidence, and overconfidence breeds recklessness. They size up too fast. They stop following structure. They assume if it worked once, it'll work again. But the market doesn't reward your past. It doesn't owe you consistency. It doesn't care. When I first started, I made the same mistake. I thought early wins meant mastery. But those wins came in a sandbox. Small, simple environments that didn't test me. When I entered the real exchanges, everything changed. Execution slowed, spreads widened, and my so-called edge vanished overnight. My capital disappeared faster than I thought possible. Not because my strategy failed, but because I misunderstood how quickly arrogance gets punished. Confidence without structure is just exposure. And exposure kills. Most traders think the goal is to be right. It isn't. The goal is to survive. The ones who make it aren't the smartest. They're the most disciplined. They learn that a small win teaches nothing, but a painful loss, if studied, can save a fortune. The market doesn't care about your early results. Neither should you. The only thing that matters is what you consistently do when tested. And the test always comes. The deadliest mistake in trading isn't a bad entry or a missed breakout. It's holding a losing position, hoping it turns around. That quiet, internal whisper, just a little longer, has wiped out more accounts than any bad chart ever could. Losses start small. A pullback here, a dip there. Nothing alarming. Then hesitation sets in. Instead of closing,
The trader watches. The price moves further against them. They rationalize. It's just temporary. It'll come back. They zoom out. They check news. They look for excuses. But deep down they know. They just don't act. Hope replaces logic. And the longer they hold, the heavier it gets. Emotionally, financially, psychologically. Soon the loss isn't just on the screen. It's in their identity. They refuse to close, not because they believe in the trade, but because closing means admitting failure. I've been there. I held a position once far past my stop. I had every excuse: noise, sentiment, temporary pullback. All lies. The truth was brutal. I lost more in that single trade than I'd made in the previous 5 combined. The market didn't do that. I did. By refusing to obey my own rules. A small loss is a trade. A big one is a mistake. And the difference between them is time.
Because they know one thing. If you can't take a small loss, you'll one day be forced to take a massive one. And when that day comes, you won't be trading anymore. Most traders never build a system. They rely on feelings, rumors, and luck. They chase setups they don't understand. They exit emotionally, not logically. That's not trading. That's guessing. And the market has no mercy for guesses. Instinct is unreliable. What feels right today will look foolish tomorrow. But a system, tested, refined, and followed, is your armor. Without it, every trade becomes emotional, and emotional trading has no edge. A system doesn't have to be complicated. It just has to be yours. It must define your entry, your exit, your risk, and your size. And most importantly, it must be followed. You don't rise by predicting the future. You rise by responding to reality with consistency. A system gives you that power. It removes doubt and builds structure. Without it, even winning trades teach the wrong lessons. Losing ones destroy confidence and eventually capital. Emotions are silent killers. They don't shout, they whisper. They tell you to hold a loser just a little longer. They convince you to ignore your stop. They make a small win feel like failure and a large loss feel like a challenge to beat. If you don't control them, they will control you. Fear comes first, the fear of being wrong. Then comes greed, the hunger for more. Both look rational. Both destroy you. Discipline is not emotionless. It's clarity under pressure. It's the ability to act when your instincts beg you not to, and to do it not once, but every single time. A strategy is only as strong as your ability to execute it without interference. If your emotions run your trades, your results belong to them, not you. Another fatal mistake: size. Most traders believe bigger positions mean bigger profits. But risk isn't about how right you are. It's about how wrong you can afford to be. I never entered with full size. I tested first. I waited for confirmation. If the market proved me right, I added. If it didn't, I stepped aside. That wasn't fear. It was survival. I've watched countless traders enter heavy, without proof, and panic the moment price moved against them. They didn't lose because they were wrong. They lost because they bet too much too soon. You don't win by being bold.
You win by being precise. Because one oversized position can erase years of discipline. Every trader loses. That's inevitable. But the difference lies in what happens after. The average trader blames the market, the news, or bad luck. The disciplined trader looks inward. A loss isn't failure, it's feedback. It's the data that refines your edge. Ignore that data, and the same pain will return again and again until the market takes everything. A trader who refuses to study his losses isn't a trader. He's a gambler with a pattern of denial. Losses are tuition. You pay them either in money or in lessons. Only one gives you something back. The urge to always be in a trade is another silent poison. Most believe if they're not buying or selling, they're falling behind. But the truth is, patience pays more than motion. I learned to wait, to sit out, to protect capital until the right moment arrived. Because friction, the cost of unnecessary action, is what drains most traders. You're not paid for activity. You're paid for accuracy. And accuracy takes patience. It takes maturity to watch the market move without you and feel nothing. It takes strength to let the amateurs chase noise while you protect clarity. The market is a storm. If you chase every wave, you'll drown. But if you wait for the one that aligns with your wind, you'll ride further than most ever dream. Everyone in this game has advice. Friends, brokers, strangers, all sure they know what's next. But conviction borrowed from someone else is worthless. The market rewards only your discipline, not someone else's opinion. When you trade on someone else's belief, you abandon your own. And when it goes wrong, you have no anchor to hold on to. You can learn from others, but when it's time to act, your decision must be yours. Because in this business, followers don't survive. Most traders know the rule. Cut your losses short, let your profits run. They nod, repeat it, even quote it to others. But when the pressure hits, they do the opposite. They cut winners early and hold losers forever. They trade out of fear and hope instead of structure and truth. This rule isn't a cliché, it's survival. Because the market is unpredictable, and discipline is your only protection. When you follow it, your results grow. When you break it, your destruction compounds. Traders fail not from ignorance, but from lack of control. If you master only one thing, cutting losses fast and letting winners breathe, you'll stand apart from the 90% who never do. This is the line. On one side are those who chase, react, and regret. On the other are those who plan, execute, and endure. The market offers both paths. Only one keeps you alive long enough to win. Most traders fail, but you don't have to. Because the market isn't your enemy. Your habits are. Fix them, and the market changes shape. It stops being a threat and becomes a mirror. And what it reflects is you. Structure, patience, control. That's what endures. That's what wins. Stay sharp. Trade with reason. And never forget, the market will always test you, but it will also always tell you the truth.